Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The sensex and the nifty give up early gains, ending flat after a late sell-off. The nifty remains below 18,300. Mid-caps marginally outperformed the blue chips. Fitch affirms its lowest investment-grade sovereign rating for India, BBB-, as it reflects strength from a robust growth outlook and resilient external finances, but warns of weak public finances and lagging structural indicators. Fitch has kept India's rating unchanged since August of 2006. U.S. Treasury Secretary warns of an economic catastrophe if the debt ceiling is not raised before the end of the month. The report says Yellen is dialing prominent U.S. business leaders to discuss the consequences of a potential default, as the Treasury will run out of funds by early June. Air India gives another week for pilots to accept the revised employment contract. The additional window comes at a time when Air India is holding recruitment drives where several Go-First pilots have applied. The Election Commission says cash, alcohol, gold and other items meant to induce voters worth more than 375 crore rupees have been seized in Karnataka. This is nearly 5 times higher compared to the 84 crore rupees worth of seizures made during the last assembly polls. Karnataka votes tomorrow. The counting is on Saturday. A tense calm prevails on the streets of Manipur, where ethnic violence has left more than 60 people dead and 35,000 displaced. State government says about 1,700 homes have been burnt in what is the first official account of the scale of destruction since the violence began on the 3rd of May. The Supreme Court hearing resumes its petition on legalizing same-sex marriage. The apex court says it has the power to issue a declaration recognizing rights, leaving the execution to the government. The Chief Justice observes it's far-fetched to say the right to marry is not a constitutional right. Officials of Pakistan's anti-corruption body arrest former Prime Minister Imran Khan in Islamabad during a court appearance. Islamabad police say the arrest is in connection with the Al-Qadir Trust case. Khan's party calls the arrest an abduction. Russia launches a barrage of missiles into Ukraine as it marks the 78th anniversary of the Soviet victory in the Second World War. Russia's president attends a military parade and says civilization is at a turning point, tells Russian soldiers the whole country is praying for them. Can the government-backed ONDC eat into the market share of food delivery apps like Zomato and Swiggy? A special report up next. Well, let's start with the action from the Lal Street. A last-hour fall saw the Nifty and the Sensex end the day flat. The Nifty ending below 18,300. The Nifty Bank underperformed the blue chips today, ending 0.25% lower. So ITC, SBI and ICICI Bank were the big laggards today. Prashant is standing by with the day's trading highlights. Prashant.
Well, the market started with a lot of promise in the morning. The promise of follow-through after yesterday's very strong session. And the index actually went up 65 points to the day's high, which was around 18,350. And then starting mid-afternoon, gains started disappearing. We actually dipped into the red and closed absolutely flat in both the Nifty and the Bank Nifty. Broader markets also completely lost the momentum. Declines outnumbered advances. It was 2:1 in favor of advances earlier, so it was a complete flip-flop. Let me start with the large caps. The losses coming through in UPL, which reported earnings. There were earnings cuts today. ITC, which lost a little bit, and SBI. Actually, financials once again played key roles, both on the upside and on the downside as well. On the upside, Divi's, Coal India, and IndusInd Bank. IndusInd, of course, did very well yesterday, and there was some follow-through, small follow-through today as well. But outside of the Nifty, where the real price action lay, so look at Zomato, for example. Big volume-led losses today on Zomato. Apar Industries came under pressure. Huge volumes. We don't see that kind of volumes usually. Indiabulls Real Estate lost. Their entire railway infrastructure stocks, IRFC, RVNL, etc. Adani Transmission came under pressure. Oracle Financial Services. You had actually PSU banks which came under pressure for the second straight session. PNB, Indian Bank, and so on and so forth. Westlife was another noticeable 5% loser that we had. There were gainers as well, fewer in number, but decent list. MGL, Birlasoft, some reacting to numbers. Tata Communications, there was Greaves Cotton. KEI did very well yesterday, follow through today. Venus Pipes, Sula. Jindal Poly was another one which did very well. Was the market a bit nervous? Did it want to keep it light going into the Karnataka polls tomorrow? Because the state is going to polls tomorrow. Tomorrow evening, we will get the exit poll results. And it's a state election, but markets will pay attention in terms of what that throws up. Tomorrow evening, US market time, is also the big data point globally, which is the core CPI out of the US. So there is a lot to deal with. Today was a do-nothing kind of a day, the market ending absolutely flat. And tomorrow, we will deal with all of these incoming data points. Back to you.
Yes, we will be watching those triggers closely. Prashant, many thanks for joining us. Now, Fitch has affirmed its lowest investment-grade sovereign rating for India at BBB- with a stable outlook. The rating agency has cited India's robust growth outlook and resilient external finances as the key supporting factors for the rating. However, the agency has warned of weak public finances and lagging structural indicators. Fitch said the forecast is that India will be one of the fastest growing rated sovereigns globally at 6% in the fiscal year ending March 2024. Onto a money control exclusive. The shares of proprietary trades in the National Stock Exchange's futures and options turnover has increased over the last couple of years. Now, remember, prop trades are trades done by the broking firms on their books and not on behalf of clients. Market participants anticipate this trend to continue since some brokers are exploiting a loophole in the existing regulations and are actually funding their clients. Santosh Nair joins us now with more. Santosh, what's going on here exactly and what should we expect?
Well, hi. Thanks, Shireen. So, some brokers have managed to find an interesting loophole. So, what they are doing here is actually indirectly they are funding their clients. So, they are passing off those trades as proprietary trades, which on paper it may look as if the broker themselves are doing it, but they have entered into arrangement with clients. So, they are offering leverage to client. For all practical purpose, it's the broker who's putting in the trade. But what the broker is doing here is that he has already collected a certain margin amount from the client. And then on top of that, the broker will give about 5 to 10 times leverage based on how comfortable he is with the client. So the broker is making a very good return here. He's anyway earning money on those funds from his bank. In addition to that, he charges the client for funding and also charges a hefty brokerage. So in all, he makes anywhere between 16 to 25%. 16% is the minimum. This is what traders in the market are telling me. It can go as high as 25% if they are entering into a profit sharing arrangement with the client. So what they're doing here is that they're basically offering their API feed to these clients, these high volume algo traders. The algo traders then put their trades through the broker's platform. So this kind of a profitable arrangement for both the broker as well as the client. That's because the client won't get this kind of leverage from other brokers who are let's say who don't want to take this kind of risk. Remember, SEBI doesn't allow brokers to fund clients' position, and what these brokers by using the proprietary channel are doing is exactly that. They are actually funding their clients' positions. Now, what about the tax implication? How they arrange it is that because this is a business income, they are able to offset some of the profits. Even if they make the profit will be showing on the broker's book, but he can offset it against some of the expenses. So in this case, the broker will claim that the particular client is his employee or is a consultant with the firm and pays him a certain salary. Now the salary or the payout is actually arrived at after accounting for all the funding costs, the brokerage, and if any profit arrangement. Now there's also risk of a loss here, but that usually is less, because in this case the broker selects the clients who have good track record, and based on that they enter into the arrangement. But at the same time, there's a bit of risk here because you're actually allowing more players to take higher leverage than what is generally that otherwise would be possible under SEBI regulations.
All right, Santosh, many thanks for joining us. Let's see whether the regulator steps in here. And thanks very much for joining us with that Money Control exclusive. Now, 3 Adani Group companies have lost their endorsement from a UN-backed group that helps companies establish plans to reduce emissions consistently. Adani Green, Adani Ports and Adani Transmission were removed from a list published by Science Based Target Initiative for not complying with its policy. Adani Group has asked the group to justify the exclusion, as has also sought a review of its decision. The world's largest oil exporter, Saudi Aramco, has reported a 19% drop in profits in the March quarter. The drop in profit was on expected lines as rising interest rates and inflation have been impacting global demand, leading to a fall in oil prices. The company posted a net income of around $32 billion, which beat expectations. China's exports grew by 8.5% in April compared to the same month last year, marking its second straight month of growth. The growth in exports came in higher than what economists polled by Reuters had forecast. China's exports have been under pressure due to weak global demand. Imports fell by 7.9% on a yearly basis, while the nation's trade surplus grew to $90.2 billion. Well, it's been a strong Dalal Street debut for Mankind Pharma. The company's shares listed at a 20% premium to the issue price. The company's 4,326 crore rupee IPO is the biggest issue in a year and the largest biopharma company after Gland Pharma's 2020 IPO. Ekta joins us now. Ekta, good listing after a long IPO winter.
Well, yes, it's a strong debut coming in for Mankind Pharma, which in fact is the largest pharma IPO after Gland, which debuted in 2020. It has listed at the higher end of the price band at around 1,080 and raised around 1,297 odd crores from 77 anchor investors. It was subscribed around 15.32 times with QIB at around 49 times. So it has seen a lot of institutional interest, though in terms of retail subscription, it was still sub 1 times. Now, in terms of a couple of key points about the business, it gets around 98% of its sales from India. Pharmaceuticals is 90% of its business, but the consumer healthcare, which is around 9 to 10% of sales, has a strong amount of brands in it, such as the likes of Manforce, Unwanted 72 and Prega News. Its key USP is affordability, accessibility, with pricing at around 15 to 20% cheaper than what is available in the market. Now, in terms of a couple of key points on growth, the company is working towards the launch of new products to ensure growth going forward. The EBITDA margin is likely to be in the range of around 25 to 27%, so an improvement from the 9-month margins. They don't see anything wrong with the family being involved. They are looking to professionalize gradually, and they are not perturbed by competition in Tier 1 cities. In terms of a valuation on a 1 year forward, it's at around 30 to 31 times now, which is less expensive than a couple of the pharma MNCs, but nonetheless, it is a little more expensive at this point in time when compared to the likes of Suns and Ciplas as well as the Alchems of the world. Macquarie has written on it. They've initiated with an outperformed target price of 1,400 rupees. According to them, the company appears to be well positioned to double its profitability by FY26.
Ekta, many thanks. That's Mankind Pharma for you. And here's the latest from the aviation sector. Let's start with Go First. The airline has responded to the DGCA's show cause notice. Yesterday, remember, the aviation regulator had issued a show cause notice to the cash-strapped airline for its failure to continue operations in a safe and reliable manner. The aviation regulator had directed Go First to respond within 15 days. This essentially means the DGCA will decide whether the airline can continue to have an air operator's certificate. Go First, in its statement, has said the airline has already stopped taking bookings even before the DGCA's instruction. Go First added it will soon respond to the DGCA's notice. The airline also said the company is taking all measures to reduce inconvenience caused to passengers. The DGCA has received more requests from lessors seeking deregistration of aircraft. So far, the regulator has received requests to deregister 36 of Go First aircraft, and so far no word in from the NCLT, where the order stands reserved. Go First's collapse may not augur well for Air India's pilots who had been refusing to sign the new employment terms. Air India has now given another week to pilots to reconsider their decision and accept the new contract. And this extension comes at a time where Air India is conducting a recruitment drive to onboard new pilots. Madiha joins us now with more. Madiha, pilots who hadn't signed will now need to accept the new terms within this week. What are you picking up?
Well, the two pilots' unions had called a virtual meeting with their members today to decide the next plan of action. We're still waiting to hear from them on what was discussed. But in a related development, as you mentioned, what we know so far is that the airline has reopened the window for those pilots who have not signed the new terms before 30th of April, which was the earlier deadline. Now, sources from the airline tell me that more than 50% of pilots have already accepted the new employment contract. The airline apparently was receiving requests from other pilots who hadn't previously signed the terms to reopen the window. So now those wanting to sign have been given time till the end of this week to reconsider, rethink and accept the new terms. And this additional window comes at a time when Air India is conducting recruitment drives, as you mentioned, across Mumbai, Bengaluru and Gurugram to hire more pilots. And we learn that several go-first pilots who fear they will lose their jobs and want to secure their future have attended these interviews. And it is obvious that shutting down of an airline will certainly lead to an influx of job-seeking pilots. And remember, Air India pilot unions had called the new employment terms that were rolled out last month unfair and anti-labor. Now, whether the recruitment drive will force them to fall in line is something we will get to know in a while.
Madhiya, many thanks for joining us. We will head into a break, but up next, can the government-backed ONDC eat into the market share of food delivery apps like Zomato and Swiggy? A special report when we return. Food delivery app Zomato and Swiggy have cause for concern after enjoying years of a duopoly in the sector. A new player, that's the government-backed Open Network for Digital Commerce, or ONDC, has emerged on the horizon and has the potential to disrupt the food delivery ecosystem. Shilpa Ranipeta finds out more on the ONDC opportunity and how real this threat is.
In the past few days, many users have started using ONDC for food delivery, with the orders in fact doubling to about 20,000 in just the past couple of days. Now, these users have been pointing out how significantly cheaper it is to order food on ONDC, though some have complained that delivery is taking much longer. But the larger discourse is that ONDC could potentially be the next big thing for food delivery. But is it really? Let me explain. Now, unlike Swiggy or Zomato, which are integrated platforms that control the end-to-end food ordering experience, ONDC is an open network where the restaurant can list itself. Then you log on to a seller platform like Paytm, you order from there, and then the restaurant fulfills the order either directly or with the help of a logistics partner. Now, what is making ONDC so much cheaper, rather ordering on ONDC so much cheaper, is that while Swiggy and Zomato charge restaurants a commission of 18 to 25%, it's just about 2 to 6% now on ONDC, and not to forget the massive discounts that are being offered by the restaurants, by platforms and by ONDC itself. But does this mean that ONDC will disrupt Swiggy and Zomato? Well, one thing is there. ONDC does take away the single platform control for restaurants and gives them better visibility. And I spoke to a few experts who say that the unit economics are definitely better for restaurants on ONDC, while they currently don't make money on Swiggy or Zomato. And the low prices are obviously more attractive to the consumers. So ONDC is likely to emerge as a third alternative for restaurants and consumers, and could maybe take away about 10 to 15% of the orders from Swiggy and Zomato, and this could potentially even force both these platforms to relook at their high commission and other charges. But what is more important to note is that the current discounts, experts say, on ONDC are not sustainable in the long term. Food delivery also has several factors at play that make it a seamless experience. Things like speed of delivery, being able to handle high volumes, especially at peak hours, having a superior tech, making it seamless, and also capturing data. And more importantly, customer trust that the food will be delivered as promised, and if issues arise, what part of the ONDC network will be able to resolve that dispute seamlessly. These will be key for ONDC to succeed going forward.
Shilpa, many thanks for joining us. It is the eve of voting day in Karnataka. The Election Commission has announced a 5-fold increase in seizures of items that are meant to induce voters. The EC says cash, alcohol, drugs, precious metals and other items worth more than 375 crore rupees have been seized since the Model Code of Conduct came into effect. This is nearly 5 times higher than the seizures made during the last Assembly elections in 2018. Cash seizures accounted for nearly 150 crore rupees, precious metals like gold and silver worth nearly 97 crore rupees, along with alcohol worth more than 84 crores and drugs worth nearly 24 crores. Karnataka votes tomorrow. The counting will take place on Saturday. A tense calm prevailing on the streets of Manipur, where ethnic violence has left more than 60 people dead, 35,000 displaced. The state government has said that about 1,700 homes have been burnt in what is the first official account of the scale of destruction since the violence began on the 3rd of May. Over 20 people are dead and 31 more injured after a passenger bus fell off a bridge in Khargon district of Madhya Pradesh. The bus driver is yet to be traced, and according to a preliminary information, he fell asleep at the wheel and lost control of the bus. Madhya Pradesh CM Shivraj Singh Chauhan took to Twitter to express grief over the loss of lives. Officials of Pakistan's anti-corruption body have arrested former Prime Minister Imran Khan in Islamabad during a court appearance. Islamabad police say the arrest is in connection with the Al-Qaeda Trust case. Khan's party calls the arrest an abduction. US President Joe Biden is scheduled to meet top Republican leaders, including House Speaker Kevin McCarthy, to break the deadlock on the issue of the debt ceiling. The Treasury Secretary Janet Yellen has warned of an economic catastrophe if the debt ceiling is not raised before the end of the month. Take a look.
Top leaders from both parties head to the White House today with a crisis over the debt ceiling causing fears of an economic catastrophe. Treasury Secretary Janet Yellen warns that as soon as June 1st, the government could run out of money to pay federal workers, fund the military, and pay for key programs like Medicaid and Medicare.
If Congress doesn't raise the debt ceiling, the president will have to make some decisions about what to do with the resources that we do have. And there are a variety of different options, but there are no good options. Every option is a bad option.
Right now, Congress is locked in a stalemate over the issue. Republicans in the House passed a plan that would lift the debt ceiling, but only in exchange for steep spending cuts. Over the weekend, 43 Republican senators signed on an open letter saying they too will not vote to raise the government's borrowing limit without cuts.
We're trying to hold the debt hostage to us to agree to some draconian cuts, magnificently difficult and damaging cuts.
The president and congressional Democrats insist Republicans pay the government's bills now and negotiate spending during budget talks later.
Democrats are putting the country in jeopardy. The president, by ignoring to even negotiate, the majority of Americans overwhelmingly want us to sit down and negotiate.
As the leaders head to the White House, experts say the economy is on shaky grounds. A possible default on the debt, along with rising interest rates and ongoing turmoil among banks, are fueling fears of a recession.
And that's it then on this edition of Business 360. Thanks very much for watching. Do stay tuned to CNBC-TV18. The news continues.